Forget buying the dip. Today, we are going to go into the data and psychology of why you as an investor should be buying the rip, i.e., buying stocks, buying indexes, buying assets as they make new all-time highs. Totally counterintuitive, but let's get into it. This note was floating around. Several people sent it to me yesterday from Bank of America Research Investment Committee. Really great research. Shows that over the past 50 years, buying highs in the S&P 500 returned better than buying at any other time. So buying when the S&P 500 made a new all-time high actually made a better return than anything else. If you bought at record highs, you were up 13.6% 1 year later versus 12.9%. But then 5 years later, if you bought it record highs, 5 years later, you were up 87.6% on average versus 81.9% on average. And it's really kind of counterintuitive until you start to think about the way markets work. Let's think about the psychology of markets. How many times have you said, or someone you've known has said, man, if that stock or if Bitcoin or whatever it is just gets back to where I bought it and I can break even, I'm going to sell? Because it's so painful to buy something and watch it go down. You kind of want out of it as soon as it gets back to where you had it. Kind of sunk cost fallacy. But it's a market psychology that persists and that we can take advantage of. All of those old spots where people bought stocks at higher levels than it's at today, those become resistance. Prior investors are waiting to sell at those levels. But when you break through those old highs and you get to new all-time highs, there's no overhead supply waiting for you. There's no psychological break-even point that any traders or investors in the stock have. So there's no natural resistance or break-even supply, which means clear skies ahead. It means that the stock can run very easily because there's just simply not as much selling pressure above the current price. In fact, there's no natural selling pressure above the current price. It's price discovery mode at that point, and stocks can really take off when they hit all-time highs. One person that knows that really well is Michael Saylor. The company's strategy used to be MicroStrategy. Every week he puts out this plot of orange dots on the Bitcoin chart since 2020 when his company began buying Bitcoin. Every orange dot represents a Bitcoin purchase onto the strategy balance sheet. And you can see how much more active, how much more buying strategy does when Bitcoin is at or near all-time highs. He gets a lot of flack for this online. Why didn't you buy the dip? Why are you always buying the high? Well, because buying the high is when there's the most interest in Bitcoin and he can raise the most money to buy Bitcoin, but also because when you buy at highs, the returns tend to be better. Well, he's transformed his company into probably the number one stock over the past 5 years by buying Bitcoin at or near highs. And he has a great line of something like, I'm going to keep buying Bitcoin at the highs forever because it keeps going up. Why do these assets keep going up? What's the driving force there? Well, one thing I want you to keep in mind, and this is, again, very counterintuitive, because the U.S. money supply is growing so fast, the gravity of the stock market is up. So when stocks hit new all-time highs, the only thing left for them is that gravity that continues pulling them higher. Very important concept to remember as you think about investing. Now, I'm not talking about, if you're a trader in shit coins, this doesn't apply to you. If you're a day trader, this doesn't apply to you. What I'm talking about is for investors that are thinking longer term, all-time highs is a great place to be. Big takeaways. I don't want you to miss out because the stock hits an all-time high. It's not too late. or when Bitcoin hits an all-time high. It's not too late. And I also don't want you to miss out by selling there, because the problem is you won't get back in if it goes higher. You think you're outsmarting everybody by getting in and then getting out when it gets to an all-time high, and you're going to buy back when it gets lower. You're fooling yourself, because the odds are pretty good that it's going to continue higher, and psychologically it becomes extremely difficult to buy back in and get less shares for the same amount of money you sold for. So there's a real risk. One of the biggest risks of selling too soon is that you will not buy back in. And so what I do is I just don't sell those companies, those stocks, those assets like Bitcoin, like Tesla, like Amazon, etc., and many others. I don't sell them until there's a compelling business case to sell them, until there's a wildly compelling valuation case to sell them, and I'm good to be done with them forever. Because I know that if they continue higher, it's very unlikely I'll get back in. So we try not to sell. But buying the rip, that's our play. In summary, we've got the data to prove that buying the rip outperforms buying the dip. Buying new highs outperforms the market. The gravity in the stock market is up. I'm Andy Swan. Hope you enjoyed. Let me know. Twitter, X, hit me up and let me know if there's any other topics you'd like me to cover. I love doing this stuff. All right, we'll see you next time.